market structure, swing points, and the premium and discount theory. Right, there's a lot to cover in this episode. This is the final episode of the chapter, so let's take a deep dive into market structure. So for bullish market structure to be true, price is respecting bullish arrays, price is disrespecting bearish arrays, price is taking out buy side targets, and intermediate lows are taken out to fund the move up. Okay, this is how you can determine whether your market structure is bullish. To determine whether it is bearish, is it respecting bearish arrays? Is price disrespecting bullish arrays? Price is taking out sell side targets, and intermediate highs are taken out to fund the move down. Right, we were gonna take a deeper dive into this, but have this noted down. So, swing points. Okay, for a bullish swing point, I'm going to introduce you to the 3-bar swing, right? Now, a 3-bar swing obviously includes 3 candles. A down close candle, so a bearish candle, a doji candle, preferably. Now, a doji candle is a candle with a very small body, but wicks larger than the body, right? It's just a small candle, usually doesn't entail a lot, right? It just shows that nothing's happened. It's just time being printed. I will show you an example of a doji candle after we finish this slide, but a doji candle and then an up close candle. This is a doji candle right here. So you see how we do, this is a 3-bar swing, right? The 3 bars, a down close candle, a bearish candle, a doji candle, and then a bullish candle. Okay. But as you can see on the 3rd candle, this candle here is very expansive. And this holds true to most 3-bar swings, right? May not be this expansive, but it does usually incur expansion. Now we can use this information in our tradings that if we know that expansion can occur on the 3rd candle of a 3-bar swing and time is fractal, meaning 3-bar swings happen on every single time frame. Now let's say we are in a daily, and this is the daily, right? Monday, Tuesday, we're expecting a 3-bar swing. We're expecting this candle. Maybe not to the pip, but we're expecting it to be bullish and to incur some expansion, right? You can get in line with this. Okay, so this is how you can use 3-bar swings in your trading, right? And I want you to practice and have a look at these. Again, I'm going to say this every episode. You need to practice after every single episode. What am I saying? Implement it in the charts. If you're stuck on anything, just give me a message. Right? I'll reply as quickly as I can. So this example is obviously on the daily, but it can be on the 4-hour, it can be on the 5-minute. So swing points for a bearish example is an up close candle, a bullish candle, and a doji candle, and a down close candle, right? So here we see an up close candle, not exactly a doji, but you know, not everything is clean cut to say, right? And then 3rd candle expansion, and then we continue down. So the same thing here, right? You can get in line with this, yeah? Now, you need to pair it with the teachings that I'm about to teach you in chapter 2 with inefficiencies, yeah? And once you pair 3-bar swings with price arrays and inefficiencies, your trading will be a lot smoother. Now, we know that a high-grade swing point, we know what high-grade swing point is. We do also use common sense when looking at swing points. You will get a better feel for swing points the more you practice. You can't expect to understand without implementation. Just said this, I'll drill it over and over again. You have to implement and getting it wrong. So when you have finished the video, obviously go have a look yourself. So premium and discount theory and the Fib tool, so the Fibonacci tool. It is a tool that we use to measure swing points, right? Examples are going to be shown, but have this written down first. It's crucial in the early stages of trading that you don't get these mixed up. So when drawing on a bullish swing point, so we are drawing from low to high, so swing low to swing high. When drawing a bearish swing point, we are drawing from swing high to swing low. Okay, we must wait for a swing point to be made before drawing up the fib. The most important fib levels are as follows: 0, 1, 0.78, 0.5, and 0.705, right? Now, this is what it will show. When, let's say, price is going up here. Yeah, let's say price is going up in this direction. We draw it from this swing low to this swing high. And this is what the Fibonacci tool will look like. Okay? Now, ignore these two lines for a minute, but here is the 50%. So from a range, it measures from 0 to 100%, so the entirety of the range. This is the 50%, so it's half of the entire range, always. Above it, we call premium, and below, we call the discount area. Okay? Like I said here, everything above this equilibrium, so the 50%, is called a premium. Everything below it is called a discount. Yeah. Now, another thing to note, when price is at equilibrium, we need more information. We need to wait. Now, if price is in a premium, we always want to sell in a premium and buy in a discount. We never want to buy in a premium and we never want to sell in a discount. It's just common sense, right? To put it into everyday terms, if you have a phone, okay, your iPhone X, you are going to want to sell it for as much as you can. So you're going to want to sell your phone in a premium rather than a discount, right? Same goes if you want to buy an iPhone X. You're going to look for the best deal. You'd rather spend 75 quid than spending £100 on the same thing, right? So in trading, we always buy in a discount and we always sell in a premium, not the other way around, right? So here, let's ignore everything from this candle this way. Let's ignore this. Price made a 3-bar swing. Like I said, you're gonna have to use common sense when determining swing points, right? So the bottom 3-bar swing, that's fine. At the top here, see how it's rejecting? You can draw your swing point to here. Now, let's say we are bullish. Let's ignore all of this. Like, everything from this candle doesn't exist, right? We've drawn this. Okay, we are bullish. You wait for price to come down in below the 50%. Okay, here, these two lines in between here is called the ICT optimal trade entry. So basically, most people would like to check their trades here as it offers the best risk to reward. And if you would have done so, if you would have bought here, price would have obviously went, right? This is how we use premium and discount Fibonacci tool to determine where to buy on a bullish scenario. Obviously, in this example, higher time frame bias is bullish. We've identified 2 swing points. Wait for price to come into discount because we want to buy. Remember, we don't buy in a premium, so we don't buy. And when it crosses here and when it closes, you can start to look for opportunities, right? What do you notice here as well? What do you notice here? What do you notice here? 3-bar swings, okay? So you could mark your fib from here to here, mark your fib from here to here. 3-bar swings. They happen a lot. What is some of the things I needed to go over? Okay. Gone over 3-bar swings. So let's draw out some, let me draw out some now. Okay, so let's go down. So this, for example, let's say we are bearish. This is the 4-hour, we are bearish. This is a swing point. Draw your fib from high. As you can see, here is the low, right? You want to line these levels up, and this is what it will look like. Now, if you are bearish, you want to see price come in and around this level, and you can look for sells here. Now, sometimes it may come here, sometimes it may come here, sometimes it may come here. Okay, it's up to you as the trader to determine, okay, this is a fair value gap, right? Will price likely trade above the fair value gap? Maybe not. This is an order block, so maybe here's the best for entry, right? That is how you grade a Fibonacci tool. It is this icon here, right? And to change the settings, just click that little cog icon. Now for a bullish example, again 4 hour, obviously these are inversely correlated pairs, so same thing. You would look to, when price comes down to here, you would then look to buy to the buy side target. So price ideally would do something like this, right? In an ideal world. That is essentially how you draw them. If you are confused, please message me. I would like you to try draw out some of your own and send them to me as well. But that will be it for this one.